Okay, what's up, guys? We are back for another book club vlog. Same book. We're still on chapter 11. I'm not even going to act like I made it yesterday to the vlog. I did not make it to the vlog. I managed my time horribly yesterday. I will say that my trading was on point, but my time management, just for everything that I had to do, was terrible. So that's why I missed today. Anyway, so we're gonna correct that. But here we go today. We're gonna pick up on Scalps and Shorts, or The Quick and the Dead, chapter 11, right where we left off. So the last time we were looking at level 2 screens. So we'll pick up right back there. All right, cool. So here we go. All right, once in, assuming momentum propels the stock higher, you offer out quickly, grabbing as much of a point as you can before the sellers take over and the pullback begins. Before you buy, check out your target stock's personality, just as you do for day trades. What is its average pullback range? What is its average run-up range? Measure recent upswings. That helps you anticipate how far it might run once you're in. Although 500 to 1,000 shares are the minimum size you'll want to scalp when you're learning, practice with small lot sizes. A neophyte pilot who's used to flying a Cessna asks for trouble if he climbs into the cockpit of an F-16. Similarly, a novice trader used to trading small lots and extended time frames who suddenly pumps up his share size to 2,000 may end up as the scalpee instead of the scalper. Please go slowly and hone your skills carefully. Additions to your intraday toolbox. Although we are discussing scalping techniques, you'll find the information in this section, and those that follow will provide you with additional tools for all of your intraday trades. Depending on the stock they are trading, successful scalpers use the mini-sized Dow, E-mini S&P futures, or E-mini NASDAQ 100 futures as a trigger. Of course, the New York Stock Exchange and or NASDAQ tick and trend, interpreted along with the mini futures, also act as valuable indicators. Figure 11-2A and 11-2B show 5-minute charts of the ES, or E-mini S&P 500, and the Home Depot Inc. HD. The 10 and 20 period moving averages are plotted on both charts. You can see how HD followed the general movement of the ES. ES is the root symbol of the E-mini S&P 500 index futures. Note how volume decreases for both the ES and HD during the lunchtime doldrums. Okay, unless stock-specific news is in play, the ES will influence the general direction of large cap S&P stocks like HD. Both charts in figure 11-2A and 11-2B have the 10 and the 20 MAs plotted on them. The 10 MA moves closest to the price pattern. As long as both MAs are running under the price pattern, the 10 and 20 MA crossover, up for longs, down for sells, or short plays, can act as a signal line to enter and exit intraday trades. All right, figure 11-2. Oh, let me show you figure 11-2B. Note, if you use these signals during the lunchtime doldrums, you're liable to get whipsawed. Interesting word choices here. If you have Fibonacci retracements available, apply them to your 2 or 5-minute mini futures chart. They give you high probability support and resistance levels for the futures. Fibonacci retracements are illustrated in figure 11-3 on the same ES chart as that displayed in figure 11-2A. I stretch the fib lines from the initial pivot low to the initial intraday high that created a pivot high at 10:40 a.m. You can see how the ES spent the remainder of the trading day fluctuating between the fib levels. If your software offers daily pivot levels, this means the pivot levels are calculated from daily high, low, and closing prices. You can plot them on the mini futures to indicate support and resistance levels. I find that in most instances, the daily pivot levels provided on Real Tick work well on 5-minute charts. Pivots are support and resistance levels calculated by a simple formula. They were originally created by floor traders. Because floor traders can't refer to charts, they refer to certain support and resistance price levels, or pivots, to trade successfully. You can calculate pivot levels yourself, but naturally it helps if you have software that does it for you. Traders plot pivot levels from monthly, weekly, and daily charts. The daily pivot levels are the most popular. To plot these, you'll need the high, low, and close from the prior trading session, be it month, week, or day, with the basic pivot formula R equaling resistance and S equaling support. R2 equals pivot plus high minus low. R1 equals 2 multiplied by pivot minus the low. Pivot equals high plus low plus close divided by 3. S1 equals 2 times pivot minus high. S2 equals pivot minus high minus low. So, and hold on, let me just point out that S2 equals the pivot minus whatever number you get from subtracting the low from the high. You take that number and you subtract it from the pivot. And for R2, it's the pivot plus, and this is in parentheses, so you take the high minus the low, and then it would be plus the pivot. All right, so just to like backtrack on that a little bit. All right, for most basic scalping and intraday trading techniques, let me actually show you that real quick. Okay, so hopefully that the visual makes it a little bit more clear for you. For most basic scalping and intraday trading techniques, daily pivot levels work fine. Advanced traders many times add weekly and monthly pivot levels to their charts. Figure 11-4 exhibits daily pivot levels on a 5-minute chart of the E-mini S&P 500. The main pivot or median line represents the strongest line. If the futures trade below this line, they are regarded as weak on the day. If they dive below S1 or support level 1, they are weaker yet. Of course, if they dive below support 2, the bears are very much in control. On real tick, R2 is yellow. R1 is blue, the pivot is red, S1 is green, and S2 is yellow. Obviously, this is probably not going to be accurate for almost anyone, so you'll just have to pay attention to your exchange and the way things present there. On the flip side, when the futures climb above the main pivot line, that's positive. If they shoot through R1 or resistance 1, that's additionally bullish. And if they rise through R2 or resistance 2, close above it, and continue to move higher, that's mega bullish on a short-term basis. I found that pivots also hold dandy predictive values with various stock charts on 5-minute to 60-minute time frames. To find out, apply the pivots to your target stock intraday chart and note whether or not it uses the lines for support and resistance levels. Figure 11-5 illustrates a 5-minute chart of mining stock, which is abbreviated with the letter N. You could have scalped this stock both long and short using the daily pivot levels plotted on the chart. Basic strategy: buy after 1 or 2 closes just over the pivots and sell just under them. If you jump into a long trade every time a 5-minute candle shoots under them, or over the R1 or R2, for example, you'll end up with a string of losses. Wait until 1 or 2 5-minute candles or 15-minute candles, if that's the time frame you're trading, close above or below resistance or support lines. You may also want to experiment with 50% levels between the pivot levels. Just don't add so many lines to your chart that you come unglued at every possible support and resistance price level. Tick charts. Let's talk briefly about tick charts. A tick chart is different than an intraday chart dictated by time. Whereas a 5-minute chart displays 1 candle for each 5-minute increment, a tick chart forms candles when a designated number of trades take place. For example, a 50-tick chart is made of candles that are formed of 50 ticks or trades each. The actual contract or share size of the trade doesn't matter as long as the trade takes place. Scalpers use tick charts because momentum can be more apparent. When trading is slow, the candles slow formation. When the action heats up, the ticks print fast and furiously with momentum, and momentum is apparent. When scalping, many traders use tick charts to replace or accompany time charts. Figure 11-6 displays the same chart of the E-mini S&P morning session only, as represented in Figure 11-2A. This time, however, the ES is illustrated in a 233 tick chart. Note the difference in configuration. Although many traders use 50 or 100 tick charts for scalping, I usually configure my tick charts in Fibonacci numbers such as 144 or 233. Don't think we looked at Figure 11-5. Okay. Trader and author John Carter, who wrote the foreword to this book, also utilizes fib numbers to plot his tick charts. In his excellent book, Mastering the Trade, John writes, "The Fibonacci numbers are clean, useful, and make sense, and that's why I use them. If you plan to use tick charts for scalping stocks, I advise targeting stocks that trade an average daily volume or more than 1 million shares a day. High volume stocks with broad daily trading ranges carve clean, useful tick charts, while illiquid, mild-mannered stocks may only form a few tick bars for the entire day." Figure 11-7 displays a 233 tick chart of Titanium Metals Corporation, or TI, and two killer trade scalpers could have executed with the added signals of the Fibonacci lines. Cool. Figure 11-7. Scalping setups. One excellent aspect of trading is that every chart pattern applies to every trading time frame. I've noted different patterns for position, swing, day, and momentum trades, and now scalping plays because certain setups and patterns appear with more regularity and different time frames. When you narrow your trading time frame down to minutes and seconds, you'll end up scalping the most basic of patterns: consolidations, breakouts, and breakdowns, and reversals from pullbacks or rallies. It's still important that you recognize the bigger pattern, though, as optimum scalps are born of larger pattern momentum. From my own experience, I find the best scalping plays set up by forming tight consolidation patterns in the context of established trends. Those patterns move sideways in a tight price range for at least 15 to 30 minutes. The longer, the better. Optimum scalping setups. So 1, form on sturdy trend days during the morning or afternoon session, not during the choppy lunchtime session. Number 2, move sideways in a tight, orderly fashion for 15 minutes or more. Number 3, 10 and 20 period MAs ride just below price pattern for support or longs, or for longs. Number 4, as the steam builds, several candlesticks close on their highs. And number 5, volume provides strong momentum. Early morning plays don't always have the luxury to consolidate for a long period of time. Many times, the best morning scalps are reversals off of long-term daily charts or support levels. Many times, the best morning scalps are reversals off of long-term daily chart support levels. As the day continues, and especially through the midday doldrums, what is this word? Look it up. I will too. The flat lines, shelves, or ledges they draw can fuel breakouts that deliver sweet scalping profits at the beginning of the afternoon session. You can buy before the breakout while the stock's still consolidating, as long as you use precise timing and have performed your risk-reward analysis. The narrow range candlesticks forming the consolidation should start closing on their highs. Next, judge by volume, activity on your level 2 screen, time and sells, E-mini, S&P futures, and perhaps tick and trend, that a breakout is imminent. When you jump in early, you chance the stock reversing, falling through support, and diving fast. When it falls below support, the short sellers grab it and force it lower. Good strategy. Buy half of your anticipated position size before the breakout, and remaining half as the breakout is confirmed. You can sell the first half when you make a 25-cent profit and let the second half rise a level or two higher depending on the play and the stock's strength. When I buy reversals, I generally buy the entire position in one lot, then scale out one half portion at a time. Interesting. Okay. The setups shown in Figure 11-8 and 11-9 apply to intraday charts. Depending on how fast the stock is moving, I use 2 or 5 minute charts. 1 minute charts have too much noise, unnecessary movement for me, but that's personal preference. And so here's Figure 11-8 and Figure 11-9. Fantastic. The intraday charts shown in figure 11-10 and 11-12 display actual scalping plays on 5-minute charts. After you study them, pinpoint similar setups and entry patterns during market hours. Paper trade until you feel comfortable with the process and the rapidity of the plays. Figure 11-10. Okay, cool. And then we have, so described for figure 11-10, on this 5-minute chart of NTES, the stock gapped open, then filled about 50% of the gap in the first 3 candles. Traders let the gap fill take place, then they buy as the Chinese internet and wireless communications provider dipped the 10-period MA. A rise off of that MA and reversal candle on increased volume triggered the first scalp. What did I say? Triggered the first scalp. A fast breakout of the subsequent consolidation activated the second scalp, and the Gravestone Doji gave final warning to exit. The breakout of the lunchtime consolidation generated the final scalp to the upside. More than a point could have been pocketed with that afternoon session play. The volume spike, bearish divergence on CCI, and overbought condition all warned intraday players on the long side to take profits. 2 arrows indicate a scale out tactic. Figure 11-11. Let's see that before I read it. Okay, this 5-minute chart of the semiconductor SMH shows the semiconductor exchange traded fund chopping out of the open. The dipping lower and breaking down. Short scalpers could have sold short when the SMH broke the session low at about 35.75. The stock tumbled into the lunchtime doldrums, then formed a tiny reverse head and shoulders reversal pattern. At a few minutes past 1 p.m., volume came back into the SMH and it reversed in a missile-like uptrend. Scalpers who entered would have been watching the E-mini futures, S&P or NASDAQ for similar move, and perhaps the SOX, the semiconductor index. All right, cool. Boost your scalping profit potential. We want to do it. Target 1 or 2 scalping setups that fit your personality and work exclusively with them. Gradually, you can add a variety to your setup arsenal. Do your risk reward analysis before you enter a scalp. Check your target stock's prior resistance level on its daily chart and 5 to 15 minute charts. If resistance lies less than 75 cents away, find another scalp to target. The best high probability scalping setups provide lots of headroom. Remember to check intraday charts for nearby resistance, and especially check the 200 period moving average on the 5 and 15 minute charts. If it slopes down, ready to dunk your target stock, look for another play. More than 8,000 stocks make up the major market. Why choose a low probability play when a high odds setup waits just around the corner? Oh my God, so true. You'll get ate up for no good reason. What if mid-scalp the S&P futures suddenly makes a U-turn and your stock follows? Issue a market order fast, or issue a limit order 1 or 2 levels under the inside bid, above the offer for shorts. Why do you place your order under the current bid price? As I've mentioned before, it gets crowded when everyone's heading for the door at once. First come, first serve. Give yourself a price cushion. Otherwise, you'll find yourself in the gut-wrenching position of chasing the stock down. If no buyers want your stock, it could take 1 or 2 points or more before you finally sell. I've seen that happen a zillion times and experienced it plenty when I was a novice. That's why you don't want to get greedy and wait for the extra dime. That's why you get out while momentum is still positive. That's why you get out when you can, not when you're forced to. Finally, that's why you need fast hands and cast iron nerves to play this game. Remember, on days market internals tell you strong uptrend or downtrend rules, you can day trade and let your profits run. But on choppy, whippy days, scalping, or better yet, washing your car, makes for the smartest strategy. When in doubt, stay out. Scalping checklist. Scalping guidelines are listed below. Consider making copies and keeping them handy until these steps become second nature to you. If more points occur to you, add them to this list. All right, so this is the scalping checklist. Hopefully you take notes while you're listening to this. So go ahead and write this down. It would be smart. So number 1, scalping checklist. Top-down criteria is in place. I'm only laughing because I went against this today, and I literally got ate up in the market today because I did not follow the rules. Anyway, number 1, top-down criteria is in place. Overall market, NYSE or NASDAQ, your stocks industry, tick trend, S&P E-mini futures, and or E-mini NASDAQ 100 futures in an uptrend. You'll want these market internals negative for shorts. Number 2, resistance on daily chart and intraday chart. Moving averages or overhead price congestion will not hinder immediate price movement. Ooh. Resistance on daily chart and intraday chart. Moving averages or overhead price congestion will not hinder immediate price movement. This was my hunch. I'm glad I was right. Number 3, intraday chart forms tight, orderly consolidation pattern with majority of candlesticks closing on their highs. Number 4, strong volume coming into stock, increased volume spike forming on breakout. Number 5, level 2 screen spread between inside bid and offer is 3 cents or narrower. Number 6, good depth on inside bid, 4 or more specialist market makers or more. Number 7, buy orders are eating through levels on the ask. Okay, I think that is actually a perfect place to stop for today. These last 2 chapters are filled with so much information. I'm gonna go through and I'm gonna re-listen to chapter 10. Yes, I'm gonna re-listen to myself reading chapter 10 and definitely this chapter as well, because the things that she's covering in these last 2 chapters, they're so important to understand, because it's these are the things that you're going to be actively engaged in every single day when you're trading. So I think these 2 chapters are absolutely amazing, and I hope you're taking notes and looking at a chart, after you take your notes, and just kind of making sure it makes sense to you. So I would highly encourage you to do that. I'm absolutely going to do that today, tomorrow, and the next day. But I will see you back next time, and we will go over selling short. Don't sell it short. All right, cool. So we'll talk about shorts whenever we come back. But anyway, thanks for joining. I hope you guys are staying consistent. Make sure you guys are studying every single day, and make sure you are don't just listen to the information. Go look in the charts and make sure you're actually understanding it. Make sure it makes sense to you. It would not be ridiculous for you to look at something 1,000 times just to make sure that it makes sense to you, and that moving forward, it's knowledge that you can actually compound on instead of being confused moving into the future. All right, so I will see you guys tomorrow. Thank you for joining.
I ain't worried about a motherfucking damn ring or a relationship. She better not be on that basic shit.